Most people think when it comes to purchasing properties or investment properties, there's TD Bank, there's RBC, there's BMO, or there's Service Credit Union, but they don't realize that there's alternative ways of lending that can offer you greater short-term benefits than the large banks. Some of these outfits can also offer speed that the large banks cannot. And that's why I'm here with Ryan Day from Calvert Home Mortgage, which is an alternative lending sort. It offers alternative lending, and you're head of business development, and you work with a lot of primary home buyers and investors from both Alberta and Ontario.
Correct. Correct. Yeah. Thank you so much for the intro. Super pumped to be here. Share some knowledge and any tidbits of wisdom in order to help the real estate investor community. Also building off that, last year we lent out around $425 million and 60% of that was in Alberta. And of that 60%, 75% was in Calgary and 25-ish percent kind of on average is in Edmonton. And yeah, it's primarily serving real estate investors that are doing fix and flips or just need short-term financing in order to bridge a gap if they're looking to pull out equity from another property to close on another property. Mainly, we're in the business of creating tailored solutions for clients to help grow and scale their real estate portfolio for residential properties on the lower end to mid-market price range in major urban city centers.
Amazing, amazing. And you know what? I use private lending as a primary home buyer on the residence that I'm occupying right now. And how I use private lending, and I wouldn't have been able to purchase this property without private lending because with my situation, I'm set up as an entrepreneur. So I have my own business, Calvin Realty, and then I have other businesses as well, like Forum and Recon, which you're going to be at, which we're really excited to have you at. And with this particular home, it wasn't just how much I pay myself on paper every year, but it was also the condition of the home that created a concern from the A banks. Okay. And so naturally as an entrepreneur, most entrepreneurs will not get financing from like a BMO, TD, RBC in many cases. There's just it's very, very difficult. And if you do, great, fantastic. But a lot of entrepreneurs use or own a small business use B lenders. And B lenders would take on what would be considered a slightly higher risk client, which in turn would offer a slightly higher interest rate than what you could get from, the big five banks. Now, a lot of people don't realize that there's also private lenders or C lenders. There's a lot of different, names for it. And in this case, I wasn't able to get a B lender either because they didn't like the property. And the property had good bones, but for what they saw was a garage that was 18 inches sunken on the roof more than it should have been. And the house completely original with big trees right in the middle of it, growing into the skylight. So obviously this would freak out any appraiser and they're not going to know what to do. But I really wanted the house because the house is unlike anything I've ever experienced before. And I knew I could make the house into what I feel like is probably close to top five Edmonton's coolest homes. And I could have done it without private lending. So with the offer and how I use private lending, like an organization like yourself, Ryan, is I also knew that, it was a competitive offer situation. There's two other offers at the time, but we really wanted the property, but there was a limit of how much we were willing to spend. So we knew that other people that were going to put conditions on the property were probably not going to get their conditions met as the bank did the hard version of their approval. And most people don't know is like a pre-approval doesn't mean you can go write checks for any properties and just remove conditions. There's a soft approval and a hard approval. The hard approval comes when the property is under assignment or under pending status. And so in this case, the realtor that was representing the listing also knew that as well. They didn't want conditions because they knew that most banks would flag it once the appraiser's going to go through. And there wasn't as many drive-by appraisals like we saw in COVID. People are actually going through properties again. Appraisers are. And if they see red flags, guess what? It's going to inhibit your ability to get financing. Deal's going to fall through. Listing agent's not going to be happy. Seller's not going to be happy. We went unconditional because of private lending. And we got the offer accepted 35,000 less than the second highest offer. So we saved ourselves $35,000 by going private versus the second highest offer, the number one highest offer. We saved like 40,000 in comparison, but allowed us most importantly to enter into our primary home that would not have been achievable without someone like yourself.
Yeah, that's a great scenario. Congrats, by the way. That's
Thank you.
amazing. And yeah, there's a time and a place, and pros and cons obviously to each. But in scenarios like those where the risk, can be viewed a little bit higher in a lender's point of view on an A or a B side, alternative lenders, private lenders, typically they're okay with that risk as long as they know the market, they know the community, and they've done their due diligence on the property as well as on the client as well too. And similar to that scenario, that's exactly what we focus on. So a bunch of clients will come to us, they'll purchase dilapidated properties, hoarder houses. We've had ones with foundation issues, ones that have been caught on fire, mold. So as long as the client has plans to remediate the structural issues, whatever the issues are, that's completely fine for us. Just because we're comfortable with that risk. Last year, of the mortgages that we lent out, there was maybe around just under 900. And a bunch of these properties are just in very poor condition. Obviously, it doesn't sound like it was the case for that one, but sometimes these issues come up. And if it's not going to be a good fit for the bank, but as long as you're going to fix those issues, the as complete value once all the renovations are done is really what we focus on. And then building off of that, like we have an in-house valuation team who, if you provide a detailed scope of renovations of what you're going to be doing on the property, we'll pull comps completely for free. We don't require a third-party appraisal in order to confirm what the property will sell for or refi at once the renovations are done. And typically, especially newer flippers in any of the markets that we lend in, like to have that second set of eyes if they don't have the confidence. We always recommend that they work, with an experienced realtor like yourself that has done their due diligence on the property as well too. But mortgages, we kind of use a shoe analogy. Like you're not going to wear running shoes to a wedding or vice versa. There's a time and a place for private financing, A financing, and it's just marrying the specific mortgage products with the client scenario. As if you're flipping a property, you're going to have prepayment penalties. It's dilapidated. It's not going to go to an A lender or B lender typically on average. So there's a time and a place. And obviously people are super focused on the rates and fees, which as they should be. But when you break it down on a daily and monthly basis, taking into consideration all the costs, it really just comes down to the numbers. If the numbers work, awesome. If it don't, then typically clients keep looking. But it sounds like an awesome scenario in your case.
Hmm. And so let's dive into the example of a fix and flipper. So a
Yep.
fix and flipper can go to their bank, BMO or TD, and they could say, "Hey, my goal is to purchase this property, and I want to renovate it and get it done in 3 months. However, I'm going to have a contingency that it actually could be 6 months, and then I need to be able to sell the home with no penalties." A lot of these A lender banks, if you were to compare what they would charge in fees in comparison, if you were to take your interest rate that you'd be paying over the course of those 6 months, the penalty that you pay exiting that mortgage, and compare it to what you can offer, even though your higher interest rates, in a lot of cases, in most numbers, in a shorter term, Calvert's cheaper. Calvert's actually more affordable than some of these larger banks of what they can offer you. And I think that's why you guys do so well.
Yeah, that's exactly it. Building off that as well too, typically if a big bank knows, like a few of our clients have used big banks before in the past. If the clients are looking to do volume, banks, if you're flipping a property, they're not going to provide you a mortgage like the big banks. So you can get away with a few of them. A lot of our clients who are doing volume, doing scale, where they have anywhere between 2 to 10 projects on the go at once. Mainly they use us for speed, flexibility, because there's reduced documentation. It's just a more seamless process. But big banks don't provide these types of mortgages, and if they do, it's news to us. But yeah, banks like the long term kind of set it forget it, typical 5-year terms. And anything really short term, it's not typically within their scope. So there's no other lenders in Canada, unless you go alternative or private, that is really focusing on short-term requirements for people who are buying, adding value, and either selling or refining in Canada. From what we've seen on a daily basis, company's been doing this. This is our 50th year in business as well too. And then once we have a relationship and track record, we can receive a file today. It's a bit after 11, and we could fund it tomorrow. So we're known in the marketplace for really quick financing and turnaround speed. So that's definitely a value add Whenever clients are looking at properties, especially, in a seller's market, where they're able to go in unconditional as long as we've done our due diligence on the property. And similar to your scenario, if you're offering a super quick close to the seller, typically you can get a price reduction. So that goes in their favor, and not having conditions as well too, having a nice clean firm offer um, is typically obviously what sellers appreciate most.
Definitely. I mean, if you come across a property that you can't see yourself living without, I mean, you can always close with private and then refinance with a larger bank as well. So you're not stuck with that high interest loan for a long time. You can use it for a short bridge to allow you to enter that property, especially in those hyper competitive markets like we've seen in Calgary, like we saw in Edmonton, the later end of last year and the early part of this year. And I mean, multiple offers can be really exhausting and frustrating. And I do think that more people would see success in the execution of achieving these offers being accepted if they just knew what was available to them and they had the opportunity to have these relationships and connections. And that's why I'm so excited to have you at Recon, being an investor focused conference. A lot of people kind of misunderstand private lending. They don't know how it works. They think it's just like they see, like, 12 to 15%, and then they run. But then if you were to look at some of the fees that these banks charge, like some of these large banks, if you break a mortgage, $20,000. I mean, tell me what's cheaper, 15% interest or 4% interest, and you have no penalties or very minimal penalties at the end of your 6 month term with Calvert, or the term of 6 months to a year to 2 years to three, or even breaking it within your 5 year agreement with the bank. It can be substantial, right? And so you have to look at all of your numbers. And that's some of the great things that you're going to be able to provide at Recon is clarity on that, but also the opportunity to meet you, and investors can dive into their situation and you can tell them genuinely, whether you're able to help them or whether you recommend someone else. You always take a very honest approach. And if you can help somebody, you'll tell them. But if you think there's an alternative option that might work better, you'll also let them know that as well, which I think is fantastic.
Yeah, 100%. You nailed it on the head there. The main thing that we always focus on is education and doing what's best for the client. So if they have a deal, we're more than happy to run the numbers, even if we don't fund the deal, as long as they provide their documentation to have a second set of eyes on the deal. And we're more than happy. We break down numbers all the time, whether they're using us, another lender, if they're able to go through a financing in order to set the client up for success, just because we know long term, no matter what we do, as long as we're doing what's in the best interest of the client, setting them up for success by educating them on how to run numbers on deals, what to look for from what we see on a day-to-day basis. Um, on average, we normally see around 100 to 125 deals a week. We approve around 30% ish of those. So the company's seen everything in terms of, deals going really well when the market was super, super hot, deals not going as hot. Like back in March of 2022, the Ontario market decreased in a few months, 20%. Um, and when we're in those types of scenarios, we always call our clients, educate them of what we're seeing going on in the marketplace, because our valuation team, whenever we get these opportunities, they flag anything that's going on within a specific community in terms of the HPI. So if we see that, okay, we have, a few properties on our books that's in those areas, we reach out, say, hey, HPI is dropping pretty quick. You should, what's your plan to finish this project? Because just based off of our experience, speed's always the name of the game. And the quicker you're able to get in and out, typically it saves a lot of headache in the future. And then number two is, yeah, just given our history, we have a bunch of really good relationships with other lenders, other banks, A, B, and C lenders, credit unions. So if we can't help support, even if you have a deal on your desk that isn't a flip, we're more than happy to make introductions with the relationships that we have in order to help clients make intros where possible. An example of that is we've been seeing a lot of construction deals. We don't really focus too much on construction. There's a few other alternative lenders in Edmonton and Calgary, so we make referrals there. We've seen a few agriculture and land deals come across our desk that are like 10, 20 acres. So we're more than happy to make intros there. So it's essentially just, yeah, having goodwill, making intros where we can to offer value. Because over the long run, it'll definitely come back.
Absolutely. And I can't stress this enough of how important it is to have investor focused professionals in your corner, because they're going to be able to ask the questions that you're not asking, identify blind spots, and blind spots are always the most expensive. And so whether it's, the lender to the lawyer to the handyman, to everybody, the realtor, there's just so many layers of people that you should have in your corner. And that's another great thing about Recon is you can go there and everybody there are people that we use or we recommend. So we're taking the yellow pages of thousands of businesses and we're shortlisting it on who the best of the best is. Go make your relationships. Even if you just walked away with 5 or 2 really good relationships for professional partners that you can use, the value that you're going to be getting versus the cost of the ticket is not even in comparison, right? And this is definitely a relationship that you want to be able to lean into. So Ryan, I'm very excited to have you at Recon. We're getting very close, September 6th and 7th. I know you're going to bring so much value, and I urge you guys, go say hi to Ryan, go to the Calvert booth and have the conversation.
Yeah, super excited. Best of the best there. And that's one of the toughest thing is knowing who's credible and going through your due diligence. And I know you've done an amazing job on getting the best of best within each industry as it revolves around the real estate investor community. So I'm super pumped, very excited to meet a bunch of people there. And like you said, just offer value. I know there's going to be a bunch of great resources that are available and more than happy to help in any way possible.
Fantastic. Ryan, we'll see you very soon. And everybody else, we will see you there. And if you message Ryan, he might even be able to help you out with a bit of a discount on your ticket, but I'm not going to give you any more than that. Ryan, thank you so much. Have a great weekend. We'll see you soon, okay?
Cheers. Have a great weekend.